sharing sessions, I will talk about how to become a profitable trader. So to become a profitable trader, actually you need a lot of like psychology stuff because trading is actually against your emotion and greeds. So in this sharing sessions, I will talk more about this. Please make sure you all follow me until the end. So this is my topics today. Yeah, how to become a profitable trader. I will also share with you all how to do the basic fundamental analysis and also how to do technical analysis. So we'll start from very basic. So please bear with me. First of all, what is stock markets? So stock market actually is a place full of regrets. Why I say so? It's a place people will think that it's a place to earn a lot of money, but actually it's also a place that can lose a lot of money if you don't have enough disciplines and trading plans. So for me, stock market actually is a place full of regrets. What we will regret about. So we will be very regrets about buying too little, buying too many, like selling too fast or selling too slow. So we never know uh, what is the target. We always regret from taking profit too early and also taking taking also maybe buy too much or selling at loss. So all these make us a place full of regret. All right. So please bear with me for a second. I think the screen got a little bit problems. Okay, so for from my experience, actually psychology is very important in trading in order for you to become a profitable trader. So why I say so the psychology is very important is because once you conquer the psychology, you can actually uh, have a winning rate that more than 50%. And in the end, I will explain why with the winning rate only 50%, you can earn more money and earn profits. So in stock markets, actually many of us tend to have a fear of missing out. It's like Tesla, you now is keep going up and going up, but you FOMO, maybe you FOMO, you didn't wait for the retrace, and then you enter at high, and then you get trapped for times and times until you lose confidence to the stock markets. And also you are always afraid like selling too soon. You didn't know the target, then maybe after you sell, the price skyrockets. And that is the time you're holding a stock too long. Then your emotions will be very fluctuate. Because you hold too long, you are thinking that you want to sell or not, or hold the stocks. All right. And there's also a problem that overreacting to the market's volatility. And most of the traders have the issues that following hot tips or trends. So my advice is in stock markets, it's better to build own understandings towards a stocks or the markets, and then you just follow your plans so that you don't become your emotions will become more stable. Then you don't do many stupid mistakes. All right. And most of the traders, like maybe beginners, always comparing to the others' success. Maybe you can see a lot of influencer, finance influencer, that they share their portfolio, then they can earn like 5x, 10x with like crazy returns, like in few months or few weeks time. But bear in mind, why they are not the richest guy in the world? Why Warren Buffett, like with think around 20% returns, become one of the richest men in the world? So this have to give us to think about what actually trading is. All right. So we don't blindly follow those gurus, because in the markets, they only sell what you want to see. In fact, in markets, you can be earn a lot, yes, but also you can lose a lot. There's many gurus, they didn't talk about this. And for trading, actually is the hardest way to earn easiest money. People think that it's very easy, like to buy, sell, and then earn money. In fact, it involves a lot of psychology problems. So for those who want to become a profitable traders, one must conquer the psychology aspect. You must control your greed, your emotions, and then you know what to do. So even you miss a trendy stocks, you also won't feel anything. Just let it go, because markets always have opportunity. All right. So many people also have the issues like overconfidence and do impulsive decisions. Why they have this mindset is because they want to do revenge trading. What is revenge trading? It's like once you lose, maybe lose a trading like few bucks, few $100, then you want to come back in the faster way. So your emotions tend to be more fearful. Then you want to do revenge trading. Then you do all this stupid stuff and then over leveraging or keep on like bet the markets. It's actually, with if you are doing impulsive decisions, actually you are not much better than a gambler. So in financial world, trading and gambling actually is just like a just a slight difference only. You can become a gambler from trader very easily, if you know what I mean. And there's also a lot of people that do analysis paralysis, means they do a lot of analysis, they study a lot, they learn a lot, they learn any types of strategies, and then in the end he make he still didn't profit. Why? Because actually trading, you just need to focus a simple and easy strategy. So and then you just keep practice it until you become profitable. You don't have to learn all those a lot of advanced stuff. Basically, all those basic stuff is enough for you to become a profitable trader. But still, trading is all about 80% is all about psychology problems. So for the markets, market cycles can also unpredictable. And to become a trader, you need to have a strategy to tackle different types of trend, like sideways, uptrend, or downtrends. So in order for you to like consistently profit in the markets and don't do stupid mistake, stupid decisions. All right. Okay, sorry, today my screen is a little bit laggy, so please bear with me. Okay, I think this one is much better. So sorry, yeah. Okay. So you all can leave any questions or maybe types questions. So I will answer if you all want to ask anything. All right, don't feel shy. Okay, then I continue. So causes for those to have impulsive trading behaviors in the markets is always because of lack of trading and invest plan, lack of understandings towards the markets, lack of experience, like maybe first time experience a big drops and then sell at low and always buy at high, follow the trend of the markets. Because you don't know what is the good point to enter, what is the price, where is the best price to sell. Actually, this is very subjective because everyone's target is different. What is your plan when you enter the markets? You want to enter for short term, like maybe few days. You just want to earn 2%, 3%, or you want to target 10%, 20%, or longer time frame, like few weeks to months, or some people even invest for long term, like few years. So in order to become a profitable traders, you have to understand before you buy a stock, before you invest or trade anything. You have to know what if the stock price drops, what if it goes up, what if it stays, what if. You just have to answer. If you can answer all these questions, then I can say that you at least have 70% solid plan that can let you become profitable in the markets. All right. So another thing is lack of own understandings. So many people didn't have confidence to like believe their analysis. Why? Because they don't know what is the winning rate, or they don't know the causes why the price goes up, why is the price goes down. They they just follow tips, like maybe people says Nvidia is good, maybe people says um, Tesla is good, then they will just whack in and buy. Then when it goes in, the market price drops. Drops, it can be really downtrends, or it can be a time to let you buy at dip. But when you don't have plans, but it drops maybe a slight heavy corrections, like maybe 20%, 10%, you're already like emotional fuck up already. All right. So to become a profitable traders, the first thing we must do is we must have our own plan. We have to conquer our psychology. We don't want to do stupid stuff. We need to have good plan. We need to do the analysis beforehand, because when you enter the buy, basically everything is decided. Either you will profit or not. You can't do anything after you buy the stocks. But most of the people, they will just jump in and then let it maybe go up and then very happy and then didn't sell and maybe drops again. It supposedly maybe it's the time for you to buy the dip, but you go sell at the dip and then you keep repeat until you lose confidence to the market. Then you fail as a trader. You are not fail. You become a gambler. So this is the difference between profitable traders and gambler. Either way, actually, traders is also one of the gambler category. Maybe you can say trader is a professional gambler because trader is using the edge, market edge to get a certain consistent result. All right. So till now, any questions? Or maybe you want to understand more, want to understand what is my as a trader's experience, all those stuff. All right, anything can ask me, just stop me and let me know. All right. Okay, if not, I will just continue. Okay, so to become a trader, capital is very important. The capitals, if the capital is too small, you even with maybe 200%, you only earn 1,000. This is not much. But with maybe 1 million, if you make 10%, is 100,000 already. What is 1 million already? 1% is what 100,000. Okay, so this is the difference. I will talk more about I will give you a live scenario. Not live scenario, I just give you examples and then maybe you all can think about it. That if you have this much of money or if you had that much of money, what we will do. All right. So let's say if you have $1 million versus $500 capital. So I told you, if you have the 80% chance to earn 10%, vs 20% chance to earn 500%. So if you have this much of capital, which one you will choose? Like 1 million, you all will whack the 20% chance to earn 500%, but 80% chance to lose, or you use $500 to have 80% chance to earn 10%. So which one will you choose? I actually already put down the answers here, but maybe y'all can let me know. Let me know if there is people that have 1 million and then choose those 20% chance to earn 500%, but 80% chance to lose all. I don't think, I think maybe yes, this one will be an impulsive gambler already. But usually for those who have $500, they won't choose 80% chance to earn 10%. They will use $500 to bet on 20% chance to earn 500%. But in reality, they all will lose all money. Because maybe one times only, you bet, you lose. Even though you make 500%, 500 is become 2,500 only. Then you bet again, then you lose all again. So this is what happened with small capital issue. Unless you can conquer your mindset, you use $500 and then you just go for the 80% chance to earn 10%. But still, $500, 10% is not great at all. So at least you need to have maybe a bigger capitals, then the 10% will be more, I think, more comfortable for more, it's more like a more comfortable profit. Like for 1 million, you don't want to risk all to fight for the 500%. We just need 10%, right? 10% is 1 million already. For but what 10% is 100,000 already. This is 1 million, not 10 million. All right. So with a larger capitals, but with controlled risk, actually you don't feel stressful to trade in the market because a slight profit, it can cover all your expenses, like living expenses. But for those $500, you will keep trapped in the gambler cycle. and then your portfolio cannot grow. Even though give you win 5 times, in the end you always go back to zero. So this is the difference between different mindset between gambler and also trader. So trader will always go for a consistent growth. Maybe it takes time, but since your capital is small, if it takes time to grow your capitals, you don't have worry if you can grow up to maybe one day grow up to 500,000. But if you trade up to 500,000 with like whacking 20% chance to earn 500%, even though you got lucky, you grow up to 500,000. If you still use same system to trade, same mindset, same gambling mindset to trade, eventually you'll always lose back. So I hope no one will get into this route. So don't ask me why I know this. All right. So capitals is very important. Okay, capital is very important in terms of control your psychology in trading. If not, once we'll just keep whack, and then lose all money. All right. Okay. Then I will go to the next slide. So I will talk about difference between investor and trader. So many people can't differentiate what is actually investor and what is trader. Okay, so let me talk more about this. So as an investor, you grow together with a company value investing. So we call value investing. Like maybe you do those those fundamental analysis, like look at the cash balance sheet of the company. Then let's say you're looking at the apples, then you calculate based on your fundamental analysis, you get answers of the market, the apples now worth 1,000. So now the price is still at 300. Is it undervalued? Yes, it's undervalued for you. So you buy it. However, market is not straightforward. Sometimes it can maybe drops to 200 first, or maybe something happens, then drops to 100 something, and then it takes maybe a few years, then go back to 500, 600. But for value investor, if it drops a lot, and then drops until maybe undervalued level, they will just keep buying. And most of the value investing trade value investor, they don't have much cut loss unless the fundamental of the company goes wrong. All right. So next, what is trader? So trader just want to earn profits. They didn't really look at into the fundamentals. They just want to trade, buy, sell to earn the profits. The price difference, the profits. Like maybe Apple today 200, tomorrow 210, then you just want to earn the $10. All right. So traders always find the entry point and also exit point and also cut loss point. Okay, so this is the difference between a trader and an investor. All right. Okay. So fundamentals analysis versus technical analysis. So I will just roughly go through the basics of the fundamentals analysis. All right. So as an investor, they usually do dollar cost averaging, and this is the famous methods and the safest methods in the long run. If you are looking stocks to go up in the long-term trend, then you want to accumulate the stocks as much as possible, right? okay, you want to you want to like get as much of share of the as much share of the stocks. Then in the end you will earn profit. I give an idea. Recently, Bitcoin had reached 92 or 93,000. So if you imagine you are the value investor of the Bitcoin, you keep buying. This dollar cost averaging means you buy at a certain buy same amount at a certain periods. Like maybe you invest $100 every week or invest $100 every month. It depends on your periods. You decide the periods and then you just buy at whatever price. Then you just keep on buying. So what will happen? Bitcoin is very volatile, right? But some of them believe the futures, the fundamental of it. So even though it went from maybe last time 3,000, I think up to 60,000, then drop to 15,000, and then today is 90,000. If you do DCA and you're looking at a very long term, like 10 years, and you believe it can go up to 100,000 or maybe 500,000, then all the price below you buy now is actually profiting when the Bitcoin make new high. Like recently is I think 90,000, let's say 90,000. So from the day before, from today to before that, all the price you buy is already in profit, right? All your Bitcoin in the hand is already in profit. So this apply to the ETF, whatever ETF, and a good stock like maybe Microsoft, Tesla is on the way to the new high. If Tesla break the new high, then means all the price you buy is already in profit because you didn't cut loss. All right. So fundamentals investor buy it when undervalued. And undervalue, everyone has different analysis methods. So the basic one is look at the cash balance sheets and maybe look at the financial reports of the company. The strength of the value investor is write huge profits because it write very long-term trends, right? And good for those who don't have time to monitor the markets. You don't have the time to monitor the markets, and then you just keep buying, and then until one day it make you profits. But you must invest in the long-term uptrend stocks. So we have to buy a good quality stocks. The top 1% is the safest. But the weakness, there is also a trap called value trap. Value trap is like maybe you look at the financial reports, everything is good, but maybe something shady already happens. But we as a investor, we don't know. Maybe their insiders already know these questions, know these problems. So, and maybe someone mistaken trade the stocks that is cyclical. Cyclical is like commodities is very volatile and down, and then they use that fundamental analysis on the company when the market cycles is on very bullish stuff. So there's a lot of trap in this financial world. So we need to consistent learn to improve our understanding towards the markets. Then only we can become a good investor or good trader. And yes, for those who do long-term value investing, their capitals can be stuck because they keep buying until it profits. But if maybe 10 years it didn't go up, it just sideways, this is also a problem for those value investor. All right, so nothing is 100% good, but we need to learn what is good from this. We just pick the good one, and then we formulate our own strategy. It's not easy, so we need to keep learning. This is just my advice towards how to become a good trader or investor. Okay, the long time frame, I think most of the people cannot wait for like maybe 3 to 5 years. I think 1 year maybe a lot of people cannot wait already, right? Because the time frame is too long. But my suggestion is your portfolio must have long-term, mid-term, and short-term strategy, and also automated strategy. I have shared what is automated strategy last time, which is one of it is grid trading. You all can look at the Usmart and consider these grid functions. If anything, you all can let me know and add me and let me know, and I will explain what is that, what is this. All right. So back to the slides. I will just roughly get through this what is fundamental analysis. Fundamental analysis actually, FA actually looks at the earning per share of the company, net tangible assets, dividend per share of the company, and also P ratio, price to earning ratio. Okay. So we do fundamental analysis. We always look at the reports. That is very important. YOY is year to year, the year previously compared to the years today, and QOQ is quarter to quarter. All right. So today I will share with you all what is technical analysis. Okay. So technical analysis used by traders and also investors to predict a future's price movement. All right. What is predict the future's price movement means? So we want to predict the markets will goes up from here or goes down from here. So we want to know the good entry point. Like when we enter here, we got a limited downside, and then we got unlimited upsides. So this we always want to find a best entry point and also a best selling point, right? Okay. So it predicts the future's price movement of. It can be used in either stocks, currencies, commodities, or other financial assets. So how do we do technical analysis? So anyone here had been learning this? Can anyone let me know? Have you all heard this before? Or maybe you all had learned it somewhere else? No. Okay. So I will just continue. Market prices discount all known informations. What it means by that? Let's say a company have a good report, but before the report release, the share market price will always go up. Not always, I think most of the time it will goes up because the insiders already knew what is going to be. So it went up until a certain point, it released the news. Then many retailers, many newbies buy on good news upon good news, and then they trap at the high. So financial market is actually an information war. You need to have strong, you need to have strong info. You need to analyze the price and then make a good decisions and then follow the shark. Because retailers can push the market price up, but with technical analysis, maybe we can follow them. So this is the beauty of the technical analysis. So market price is a reliable measure of collective human psychology. And market price is a leading indicator of all fundamentals data too. Like I said, it always move forwards. Like it will goes up before you know it. But once you know it, it usually do the other opposite trend really. So in the markets, actually markets move faster. I think maybe some says I think moves faster like 6 months ahead the real economy. So now you feel market maybe the market is bad. However, the trend already maybe the market can be very bullish because it is pricing in a coming market recovery. All right, understand the difference? Okay. So relying on fundamental news always cause you to react late, like I said. Maybe after the good news come out, then you, as you retailer, inexperienced retailer or newbies, they rush in because of good news, and then they get trapped at the high, and then the market shift momentum towards downwards, and then maybe consolidate for a long time, and then you cut loss at low, and then the price slowly move it back again, move up again. So this market cycles is always repeat, and repeat. All right, so bear in mind, we got fundamental analysis, we also got technical analysis. It's better we all like maybe do hybrid analysis in order to get the best outcome. But actually it's really subjective because I know somebody just follow the fundamental analysis, he just buy the top 1% of the stocks or buy index, like maybe S&P 500 big index. When it's big drop, then he still earn the money. So it depends what is your target, what is your goal, what is your plan. So price move with trend. So there's only 3 trends: uptrend, downtrend, and also sideways. So as a trader, you need to know the price, the market trends, like what is current market trend, what is the current trend of the stocks, goes up, goes down, or sideways. If it's sideways, you are very hard to trade because you you keep get stop loss. But if you're uptrend, when you do long, you will profit in the when your trend is right. Same as the downtrend. And also history always repeats itself. The markets won't go up forever. And at the same time, the markets won't go down forever. For those who goes down forever, it's because the stock is a shit stock. I mean, it's the company didn't actually make money. The company actually is just has a poor business model, didn't have any business mode. So in order to be safe, we need to trade good stocks. Then like the big caps, the Magnificent Seven, Google, Amazon, Tesla, all those good stocks. So so we don't face maybe the stock suddenly goes bankrupt. So we only trade good stocks to have a higher win rate, and then won't burn our capitals heavily if things goes wrong. All right. And the market is always not completely random. Why I say so? Because market keep repeats itself. It has certain frequency. I mean, like it keep repeat itself. Like drops a lot, and until everyone is fear about it, then it suddenly slowly goes up, and then people still in denial mode, and then it goes up again until people chase it back again. It's already at high. When it is at high, when people bought it after convincing themselves for didn't buy it at low, if they start to buy it at high, they will keep on convincing themselves that it will go higher. then they will start at high, and then the market start to drift, and they at the stocks average down, but in fact the market trends already shifted. Then they will trap again, and then the market cycles repeat until broke. So in technical analysis, we study the chart patterns to anticipate the price movement. I will share it in maybe upcoming sessions. I will maybe share a few technical analysis examples in the coming sharing sessions. So please stay with me. And if you all learn something from here, please let me know, because I very appreciate, and your confirmations will give me motivation. And thanks for those who stays until today. So for technical analysis, we use analysis tools. So let's go principles of technical analysis first. So we use probability and not prediction. Probability is we find a high chance of winning rate, and we not prediction. Actually, predictions and probability may be roughly the same, but prediction is more like gambling. You didn't base on something to trade, you based on feel. You feel this will go up, you feel this is good, you did feel this is bad. For technical analysis, we look at the price action. We see how the stock price react in the markets, and then we make decisions. All right, this slight difference. One have winning edge and one doesn't. So technical analysis is not about predicting with certainty. It's not 100%, but we use the probability to reach in our favor. So you can say technical analysis trader is also a professional gambler, right? Because nothing is 100% in the future. Okay. Having just a slight edge over the market will make you immensely profitable. I will explain it later in risk management. I will explain in Excel why with just slight edge, we can make immense profits. So technical analysis, usually as a technical trader, you have to look at all of this, identifying trends, support, resistance, moving average, indicators, candlesticks, price actions, and also indicators. So next, I will introduce to you all how to read a stock chart. All right. So usually the famous one, we use Japanese candlesticks. So Japanese candlesticks, actually it had these two colors. I think in Hong Kong or China, they use red as bull candle, and they use green as a bear candle. But here I just, for Singapore or maybe Southeast Asia country, we use bull green candle, and we use bear red candles. All right. So how to read these Japanese candlesticks? You can see for bull candles, it always close high. And then the bottom one is opening share price. This is the day, you can be used in the day or weeks or maybe seconds or minutes. It represents, like this one, if I said this one is day candle, so at that day, the opening share is at the bottom, and then the closing share is at the closing share solid candles there. So the upper shadow is the highest price that the stock price went, and the bottom shadow is the lowest price of the stock price went at that day. For minutes is at that minutes, and then for weeks is that weeks, and for hours is that hour. Same for the green, red candlesticks. And then I just went through very fast, like maybe give you all some brief examples, and then maybe upcoming sharing sessions, I will talk more about market structures more in depth. So what is market structure? So we have to know market is currently on accumulation stage, markup stage, distribution stage, or market down stage. This always happens like maybe in minutes or in hours time or daily time frame, even weeks time frame. So market always have accumulation point, markup point, distributions, and markdown. So as you can see here, usually when a stock went up, it always start with a takeoff style. And like NVIDIA, suddenly people talk a little bit, NVIDIA had a little bit of interest, right? Then suddenly it take off. When you fly, then suddenly have a first sell off. This is just one of the model. It doesn't really follow 100%, but usually this is a big, roughly the ideas of how a stock begin to the end. And then a stock won't goes up goes up always. It will hit certain point and then it breaks, and then keep repeat in the higher time frame or lower time frame. So that's first sell off. Then people said, oh, NVIDIA maybe it's just a normal stocks, anything. Then it started to slowly went out, and then get the media attentions, and then many people talk about it. Then suddenly it become greed. A lot of people talk about it, and many people say it will go up even higher, and then many people jumps into it, and then it breaks new high, keep breaking new high, and then suddenly it drops. When it starts to drop, people will think that it's time to buy at the dip. But in fact, maybe the market's already up, the stock is already up from 20 to 100 of maybe 200. It's crazily up. And then people still say it can still go up 5x, 10x, and then it returns, it drops. And then people say it's time to buy a dip. Then when you buy, you keep buying and lower. And then usually when a distribution ends, usually come with capitulations. What is capitulations? Capitulations is when the stock prices keep on massively drops for that day. It keeps drop until the fear is at max. Then when it drops till certain area, like maybe undervalued, people will still say it will still go to zero, goes to zero. It's very fear, and then despair moment appeared, and then it returns to mean. So this is roughly a cycle that will happen. And then I believe this is just my mere experience. I believe now NASDAQ, those NVIDIA, all those is on the way from, I think, public to greed area. But how long we also don't know. And the best money is made in the bubbles. So this is actually the bubbles chart, how a stock started from low to high. So you don't hear this stock when it's very cheap. You always heard the stock when it is like get a lot of interest from the public. So you need to be careful if you invest in these stocks. But the great money comes when it's on the fear to greed, greed to delusion bubbles mode. Why? Because many money dumped in, and then the volatility is very high, and then you can earn massive money in a short amount of time. But when things goes wrong, if you didn't have a cut loss, you didn't have a risk management, you can get hurt a lot. And then your money gets stuck for even years, or maybe the stock suddenly have bad news, like COVID, many stocks, maybe glove stocks didn't sustain and then drop all the way down, like maybe 90% from up. So all this you need to have plans. to how to avoid this. You need to have understanding about how to conquer the market, how to control the market. All right. So it's important that as a technical traders, you need to know the stock trend. Actually, it's just not for the technical traders. For the long-term invest trader, you need to know the stock trend too, like AI trend. This is the team trend. AI trend, maybe green energy trend, all this stuff. So we need to see for the basic technical trader, we need to see the uptrend markets. Like the high is getting higher, the low is getting higher. Or for the downtrend, the high is getting lower and the low is getting lower. So we need to have this understanding about market. What is the movement of the market now? So technical analysis also involve support and resistance. So stocks will hit a resistance in some point, and then it will keep react, like it cannot go through the level. So when it drops, it will drop until certain support. There is support, then it cannot drop through the support. So the market will bounce between support resistance. When break the resistance, it will go up to test another resistance again. So we need to identify the support and resistance as a technical trader. So in this example is how we differentiate the trend, uptrend or downtrend. All right, I think this is not that hard. So for risk management, like I said, we need to know how to position sizing. Why position sizing is very important? High risk, high returns. What is risk reward ratio? So let's say for position sizing, usually we use as a trader, we need to know how much we will need to lose in the capital. So let's say we risk 1%. With 1%, you actually can afford to lose 100 times, right? So if you can lose 100 times with only 1% cut loss, that means your strategy have problems. Your trading plan had problems. Okay, so we need to fully utilize risk reward ratio. Like maybe we lose 100 and then like 1 to 2, we lose 100 and then we earn 200. Or maybe 1 to 3, we lose 100 and then we earn 300. So how can we profit from this position sizing? All right, we only need 40%, 40% win rate, and then we can earn money in the market already. So I will share Excel with you all, and then I'll explain how we can actually become profitable by using risk management. All right. Okay. So this is the risk management calculator, position sizing calculator. So if you have 10,000 and then you risk 1%, your risk per trade is 100. And then your risk reward ratio, like maybe here I put 1 to 2. And then with 40% win rate, actually for per day, because the sample size is small, per day you can expect to earn $20 with only 40% winning rate. And then if you do 5 times per week, you can roughly earn $100 with this 40% win rate 1 to 2. And then maybe 1 month is 400, 1 year is 4,800. With 10,000, 1 year 4,800 with low risk, high return with low risk. I think I cannot say high return, 48% per year. So imagine you need to have a consistent trading strategies in order to win long term. Some people say 48% is not impressive, but what if one day you grow your account to become 1 million or 10 million? You cannot afford to do many stupid loss, right? Your account, like maybe 1% is already 100,000. You cannot afford to do that. You need to have a proper and consistent and systematic trading strategy. This I only said 1 to 2 risk reward ratio. What if risk 1% with 1 to 3 risk reward ratio? And then your per day, and then it looks at the per month. Per month, if you trade 20 days, every day you trade with the 40% win rate, you can earn 1,200. And then per year is 14,400. It's actually more than 100% already, with only 1 to 3. And then if you got 1 to 5 risk reward strategy with only 40% win rate, means 10 rounds you lose 6 times, but you win 4 times. You still can make profit. Like for years, you can, for 1 year, you can roughly earn 33,000, which is 330% with only 10%, 10,000 as capital. And maybe your winning rate is very low. You only win 3 times out of 10 rounds. You still manage to become profits in the long run. But still, you need to have a strategy with more than 30% win rate. And the risk reward ratio really depends on you. And then you have to find out the best strategy for you. Everyone's strategy is different. So you need to find a strategy that suits you. Somebody likes scalping, short-term trading, mid-term trading, or long-term trading, or invest. It really depends on what suits you the most, how much you know yourself, and how much you know the markets. All right, so this is what I shared today. All right, I hope you all learned something. So please bear with me a while. Okay, let's go back to the slide. So I think it's almost time. I will share, for those who don't have Usmart, please consider to use my referral code. For the left side is Usmart Hong Kong app, and for right side is Usmart Singapore app. And for the middle one, you can use WeChat to add me at my WeCom. All right. So anything can ask me, like maybe as a beginner, you can ask me something and PM me. And I will try my best to reply you all if you all have time, if I have time. And I will just put it like maybe 1 minute here. And maybe any questions you all can ask me. I will repeat it again. Like, to become a profitable trader, you actually need to know a lot of stuff. You need to have understanding about yourself. You need to have an understanding about the markets. You need to have a strong control of your emotion and psychology. If not, you're just chasing all around the world. And in the end, you can earn a lot at the maybe short period of time, and then you can lose it back also. What we look at to become a profitable trader is a systematic and consistent way. It's not a get rich quick scheme. Usually those get rich one, in the end, you'll just lose it back. Trust me, I go through this a lot and lot. and don't stick to the markets too near, because you will do a lot of stupid mistakes. All right. So for y'all can also consider to join my Telegram group. Currently, there's not much people join the groups, but maybe you'll just join first. Then I see if maybe next time I can share something with you all, and you can get contact if you want to become a trader. So for those who stay until now, so thanks a lot for staying with me, and I hope you all learn something on the basics of the market. I will share with you all like maybe slowly and get into more advanced trading strategy in the futures. So just follow me and let me know what I can improve, and maybe too much theory, and I just anything. Just add me and ask me in the Telegram or anything. And I think today's time is up. If no questions, I will end my live stream now. Okay. So before I end, I just let you all see this risk disclosure and disclaimers. And have a nice day, everyone. Hope to see you all next week. Have a great day and wish you all the best in the financial markets. Goodbye.